Hello and welcome to another update video about Solana. Solana's microstructure is still unfolding as basically wave C of this triangle. At least this is what I'm tracking. It could be something different. Bigger picture, obviously nothing has changed. Absolutely nothing. We are still likely here in this fourth wave before one more final push. Don't know where it is now, that fifth wave, but one more final push in this bull market, maybe into the $400 region. And that would be it, most likely. We'll see. But that fourth wave can extend. Quite substantially. As I said, I'm tracking it as a triangle, but we should not be surprised if there is a break below 119. I think key is to understand that a break below the $119 level. I mean, if it goes to $118.80, it's not a problem. But if we get a convincing visual break below 119. I cannot call that a triangle pattern anymore in this fourth wave. Be aware that these triangles, they can always be internal triangles as well. So it could be that it's forming, I don't know, a larger A, B, C, and the B wave is the triangle, right? But that needs proving with a break below $119. I've been highlighting for the last few months that we're dealing with a wave 4. That assumption hasn't changed at all. The problem, I think, is that the wave 4 is it has a lot of space to the downside if it really needs to. The triangle, so wave 4 can unfold in different patterns. One of these patterns is a triangle pattern, which is what I track. They are not patterns that give us great probabilities, and they are not very reliable, but it works at the moment because I believe we're working within a range. So we have this A wave down, B wave rally, the C wave might still be in the late stages, actually might still be unfolding, but in the late stages. Then we could get another wave D, which would be a lower high, and then E wave as a higher low. And then we could get a breakout to the upside. That's one way of looking at this, but a break below 119, and only the market itself will decide that, will most likely lead to a larger wave 4 in a more substantial A, B, C correction, where the C wave then will reach the area maybe around $90. That's not just an assumption. Well, it is an assumption, but it's not like a guess. It's at least based on the relevant Fibonacci extensions. So it's actually not 90. It's one second. Depends a little bit on which Fib level will be reached. But we have an area actually that starts at 108. So where we have the larger support level as well. And then typical additional levels to watch are the 1.236 extension at $94 and the 1.38 extension at 87. So yeah, around 90, there seems to be a bit of a cluster. It could go down lower, of course, but let's first see if the market, I mean, if we break below 119, then we have some additional levels to watch. I would focus first on the area between 108 and 87, because there are 4 Fibonacci levels here. 2 at 108 and then 2 more below. That could lead to a reaction. But hey, we're still holding in the range. And the movement in the range, it doesn't give us a great setup, I believe. Not until we maybe, I mean, some of you might be trend traders, not trend traders, but breakout traders. So you have a trend line here with definitely enough touch points to be relevant. So if we get a break above the trend line, that could be the indication that at least the D wave is unfolding. But it's not on the back of an impulse. So for example, if this move up, was an impulse, or had this been an impulse to the upside, and this here would be a nice 3-wave pullback into a support area, and then we have a trend line break, I would call that a really interesting setup. This is all based on corrective structures, and it's not high probability. Okay, so it's one thing I've learned over the years is that it's worth being picky about setups. I mean, if I describe to you here a wave structure, that doesn't mean it warrants a trade necessarily, right? Most movements don't really warrant a trade because most movements of charts don't give us an edge. So you should really only take a trade when you really have an edge. Okay, that's what many people miss, because sometimes people say, oh, it's so unclear, or okay, we're moving in those corrective structures and whatever, how should I trade this? Well, maybe you don't trade it, maybe you look for another setup. Yeah. I explained to you yesterday how this could be traded, in my opinion, as just a range, where you draw a line in the middle and you buy casually below the line in the middle and you sell casually above. But that takes patience. It's not for everybody. It's not for everybody. Not everybody is a lazy trader. But that comes down to trading then. That's your personal strategy edge or whatever. At the moment, you can see that in this decline here, which I'm labeling as C wave of the triangle, and in the C wave we have, oh, something's missing. I think my WXY has gone missing. Don't know why. WXY. Yeah, because it's a WXY in wave C. And then within the Y wave, we have another ABC. And the C wave seems to be unfolding right now. Okay, so we have a 1, 2, 3, 4. Maybe this is wave 4. It shouldn't go any higher than that. If it does, it's not a wave 4 anymore. Okay, because this is, as I mentioned yesterday, wave 4 resistance is at $142. But as long as it's a corrective rally, it could simply be a B wave, which would lead to an extension of the third wave. Okay, and if that happens, the likelihood increases that we're actually breaking below $119. So let me explain that again. If we move a bit higher than 142, but the rally remains corrective and we take out the previous low, then that will increase the likelihood that we're breaking below 119. Why? Because in the orange count, which is just, obviously, as I said, this move down into the Monday low could have been a third wave. This here could be a fourth wave, but I don't know, it doesn't really have the right look. So it could just be an AB of a still unfolding third wave. But then we would still get another 4 or 5 later, and that could lead to a test of the $108, $109 level. So that's sort of how I see this at the moment. I have no, in summary, I have no indication that a low is in. I think we can talk about a more substantial low being in if we get a break above the upper boundary line of the price channel. That's the update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.